a big problem with index investing is that the money would be going more into an overvalued stock and less into the undervalued stocks. So another fad which has come into limelight is momentum investing. The premise here is that basis on the stock gaining momentum on the charts, more money are allocated to it, and that will result in a higher returns. So this can happen in two ways. One, an undervalued stock in the index gains momentum because of fund managers in the active scheme or retail or institutional investors picking it up. And the second way is an overvalued stock in an upswing may get more money. So the momentum investing is nothing related to I mean, like part of it is fundamentals, but it is more of a result of a supply and demand. So it has similar shortcomings, just like an index investing. And recently, a lot of momentum funds have come into being. So now let's just look at how the momentum funds have done. So again, these are recent. So what I have done is I have taken the historical data for momentum fund. So the momentum fund I have taken is Nifty 500 Momentum 50. This is from 2010 to as of date. This I got it from the Nifty website. And for the Nifty 500, the data is from Google Finance. The first time horizon we shall look at is like 2008 to 2009 during the global financial crisis, right? If somebody has invested in Nifty 500, he would have lost 25%, and in momentum, he would have lost around 50%, right? That means like momentum, it works in two ways as well. You have to understand that, right? And this is during the COVID again, but the performance, it does not separate much. If you look at it entirely, there is hardly any difference. It moved in the similar fashion. So now let's look at what has happened during the present downturn, right? That is from September to till date, so slightly over six months. So Nifty went down by 12%, right? 100 rupees has become around 88 rupees, and but the momentum fund has come down by 25%. Nifty 550 momentum. Right, to conclude, during the drawdowns, Nifty 500 momentum 50 is shedding the gains at a higher pace. That is, somebody who is willing to invest has to understand that the drawdowns can be a lot higher. So the real question now is, how has the momentum index performed over a long horizons of time? Let's look at the data from 2010 to the present day. So Nifty 500 momentum 50 has actually outperformed the Nifty 50, right? And if you look at the values, if somebody has invested 100 rupees, that would have become like 480. Here it is like around 1300. So the outperformance has been by 200% in the similar time horizon. But you have to understand the drawdowns can be a lot more violent compared to what has happened in the Nifty. Right? If you just look at it, you will understand. A lot of volatility is there here. So this is the reason why most of the fund houses have come out with this strategy recently. And no one knows for sure how it can happen during the prolonged drawdowns, right? Because whenever there was a drawdown, it has recovered in 6 months. Even during the global financial crisis, the recovery was within 1 year, if I'm not wrong. Be it the AQR, be it the GST, demonetization, everything the market has recovered within 3 months, 4 months. During the COVID, it has happened during 6 months. So what if this recovery phases during a longer, it is longer duration, right? So any investor who is investing in such funds should understand that the possibilities of drawdowns are like a lot higher compared to the Nifty 500. So even before going ahead, it serves the investor if he or she looks at the asset allocation or talks to his or her distributor or advisors before investing. So see the links to video on how allocation can help you in preserving the returns and how to choose an advisor or a distributor are provided in the description. That this video is for educational purpose only, and it is neither a recommendation to buy nor sell the asset class in discussion. Thank you.